In this video we're looking at personal tax and we're looking at task 4 of the second sample assessment. So task 4 is about income tax payable, and this is quite a big question in the assessment. You see it's for 14 marks, so it's important that you can do it well, and with lots of question practice you can get full marks in this. Remember, in our revision materials, we have a spreadsheet which shows you multiple types of questions like this, so you can just practice and practice over and over until you get it right. So let's have a look at the information in this particular question. So Mr. and Mrs. K have the following income for 24-25. So we can see there's income from employment, self-employment, property income, building society interest, individual savings account interest, which we can ignore because that's tax-free, and also dividend income as well. We're also told that Mr. K has losses from his rental property brought forward from the previous year of 8,450, and that property loss can only be offset against property income. So we'll do that offsetting a little bit later. And then during 24-25, Mr. K paid 100 per month into a private pension scheme, and also Mrs. K paid 2,800 in pay-as-you-earn, because remember Mrs. K has income from employment. So one of the things that we need to do first of all then is just understand what is their general income, what is their investment income, and what is their dividend income, because we have different allowances and different rates. The exam software has provided two tables. There's one for Mr. K and one for Mrs. K, and this is a human marked activity in the assessment, so it's important that you set out your workings nice and clearly so that the markers can follow really easily what you're trying to do. So it's useful to set up 3 columns to start off with, just so we can get our head around all the different types of income. So the question told us that Mr. K had self-employment income of 48,780. He also had property income of 12,650, but remember there is also losses which we can use to offset against this. So there's total general income of 52,980. The question also tells us there's 920 of savings income for Mr. K, and in terms of dividend income we have 2,630. So that's all the various types of income, and then we need to consider that there is a personal allowance. Now we can see that the income doesn't exceed 100,000, so there's going to be no adjustment to the personal allowance, so we can put the full 12,570 into the general income column. Now there are allowances for saving and dividend, but that's not personal allowance. Okay, so we're just focusing on the personal allowance for now. So here are the 3 subtotals for the 3 types of income. And then what we need to do is stack these on top of each other to see which bands they fall into. But before we do that, remember it tells us that Mr. K paid 100 per month into a private pension scheme. And by doing that, we're going to affect the size of the basic rate band. The government wants us to invest for our retirement, and therefore there are tax benefits of putting money into a private pension scheme. So what we need to do then is look at the £100 that's being paid into the scheme, and we're doing that on a monthly basis, so multiply by 12. And remember, this is money being paid into the scheme from Mr. K's net pay, where tax has been deducted already. So what we need to do then is multiply by 100 over 80 to gross this up, so we can work out that how much of this would it be if the tax hadn't been deducted already. Okay. So that gives us a gross figure of £1,500, and this is going to be added to the basic rate band. So we take the basic rate band of 37,700, we add on the grossed up pension contribution to give us a new basic rate band of 39,200. So let's now stack up our various sources of income to see how this works. So remember, we're starting off at 0 here, and this is after deducting that personal allowance. Remember, we did that in the table just now. And then we'll have our basic rate band, which was the 39,200 that we just calculated, and then we've got the higher rate band above that. And in our table we worked out our 3 sources of income, didn't we? So we've got our general income, and that amounts to 40,410, and we can see that already exceeds the basic rate band, and some of it's going to be taxed at the higher rate band. And then on top of that, we have some savings income of 920, but some of that is going to be covered by an allowance. And then on top of that, we have our dividend income of 2,630, and again, some of that will be covered by some sort of an allowance. So we saw in that diagram that that this taxpayer gets into the higher rate band. So we can see then that the higher rate taxpayer for savings has a £500 allowance, and then for dividends there's a £500 allowance as well. It doesn't really matter which band we go into. So that tells us that of the savings income, 500 will be tax-free, and of the dividend income, 500 will be tax-free. And then the rest of it will be taxed at the higher rate because they fall into the higher rate band. And similarly for the general income, remember, most of it's going to be at the basic rate, but some of it falls into the higher rate. So let's start putting this into our table. Let's start off with our general income. So remember, we have general income of 40,410, and some of that is going to be covered by the basic rate band. And we know we worked that out, that's going to be 39,200, and this is going to be taxed at a rate of 20%, which you can find in the reference materials. So our 39,200 multiplied by 20% gives tax to pay of 7,840. And then above that we have our higher rate band. So this is going to be all the rest of the income. So remember, we've got the total of 40,410, and we deduct the 39,200, and that leaves us with 1,210 of general income that hasn't been taxed yet. And this will be taxed at the 40% higher rate, and that gives us tax to pay of £484. So notice the importance of laying out your table nice and easily, because that will allow you to try and prevent making any mistakes. And then we have our savings income. So remember, from our table above, we've got our total savings income of 920, but some of that is covered by our allowance. And we have an allowance of £500, which is tax-free, so there is nothing to pay here. And then the rest of it goes into the higher rate. Remember, there's no basic rate available anymore. So we have our higher rate band. So that's the remaining £420. That makes up the rest of our income. And this is taxed at 40%, like our general income. So we have £168 of tax to pay. And then we have our dividend income. Again, from our table above, and we can see that we've got a total of 2,630. There is an allowance of £500, which is tax-free, so there's nothing to pay for that. And then the rest of it is in the higher rate band. So we've got 2,130 of the dividend income fitting into that band. And then the higher rate, tax rate, is in the reference materials as 33.75%. And that gives us 719 of tax to pay. So now we just need to add up our totals for all of these figures for our tax to pay. So we've got a total of £9,211 to pay. So let's do the same now for Mrs. K. So remember, Mrs. K has income from employment plus the property interest and dividend income. Remember, we're going to ignore the interest on the individual savings account, which is tax-free. And also you need to remember that she's already paid some tax through her employment. So we need to make the adjustment for that as well. And we'll do the same sort of workings for Mrs. K now. So for the general income, we have employment of 26,780 and property is 12,650. We've also have the building society interest of 1,090 and dividend income of 3,870. We can now include the personal allowance, which affects the general income. Remember, when we go through that stacking process to see which band we go into, we need to start off with our income after deducting the personal allowance. So then we can just put in our subtotals. So we've got our general income after personal allowance of 26,860, savings income of 1,090, and dividend income of 3,870. Now, what we can do is we can see that the total for all of these is 31,820. So that's useful because that shows that we don't even get outside of the basic rate band. So everything is going to be taxed at the basic rate. So we don't need to draw our stacking diagram here. But we will, though, just to clarify what's going on. So we've got the basic rate band. Now in this case, Mrs. K hasn't paid anything into her pension and she's also not made any gift aid donations. So we've got the standard basic rate band of 37,700. And inside that, we have our general income. And then on top of that, we have some savings income. And then on top of that, we have our dividend income. But all of that is still below our threshold. And remember that we'll have a savings allowance and a dividend allowance that will reduce the tax that we're going to pay. But all of it's within the basic rate. So looking at the reference materials, we can see that as a basic rate taxpayer, the savings allowance is £1,000. The dividend allowance is still £500. So let's start off with our general income. All of it falls in the basic rate band, and that's going to be taxed at 20%, giving tax to pay of 5,372. And then there's none at the higher rate. And then with our savings income, we have a total of 1,090. But remember, we have a savings allowance, and because Mrs. K is a basic rate taxpayer, the allowance is £1,000. So there is no tax to pay on that. And that means in the basic rate band, there is just £90. And that is going to be taxed at 20%. So there's only £18 to pay on that. And then with our dividend income, remember from our table at the top, we've got a total of 3,870 of dividend income. There is an allowance for dividend income, and that's £500. So there's no tax to pay on that. And then the rest of it still fits into the basic rate band. So we've got 370. So that gives us the total of the 3,870 together, and that's going to be taxed at the basic rate. Remember that dividend tax rates are different to the other rates. So for the basic rate we have 8 3/4%. And then when we multiply that by the amount of income, we have 295. So when we add up all of these tax figures, that gives us a total of tax of £5,685. But remember, some tax has already been paid through the PAYE scheme through the employer. So we've got 2,800 has already been paid. So that means the amount to pay is just the remaining £2,885.